Let's talk transfer pricing today. And the transfer pricing that I will be discussing today is not the transfer pricing in taxation, it is the transfer pricing in costing. Now think of a company like Amul, and you are aware that Amul makes milk and Amul also makes ice cream. Now think of the fact that Amul does have two divisions, one which manufactures ice cream and the other one which makes milk. Now the division which is making milk has two options. One, it can sell milk like that as it is to the outside customer, or it can sell milk internally, or it can transfer milk internally to the other division which manufactures ice cream. Now, every division naturally has its own managers, has its own financial systems, and every manager is responsible for the performance of his or her division. Now, today, if the performance is being judged of each division, then you will have to account for its sale, purchase, cost, and all of that separately. Now, imagine for the division that is making milk, if it sells it outside to an external customer, it is able to charge a full price and, clock in the required amount of revenue. But do you think it is fair for the management to say to the milk division that you transfer your output internally to another division at no value, and we will judge you tomorrow if your performance is not up to the mark? That is obviously not going to fly with anyone. So the milk making department will specifically say that if we are transferring the product internally, let us or allow us to charge a price to the internal department so that we are also able to justify our costs and present the correct picture to the top management. While people will agree with that, the follow-on question will be, what is the right price at which the milk division should transfer their output to the ice cream division? One approach could be the milk division would say, let me charge that price which I am charging to the external customer. But then the internal management will have a retort to that. When you sell it that half-liter milk externally, you incur packaging cost and you incur transportation cost, which you have factored in your cost structure and billed the customer accordingly. But when you are transferring it internally, you are neither incurring packaging cost, neither are you incurring transportation cost. So if you are selling it at 30 to the external customer, to your internal customer, you should to the internal customer, as into the internal department, you should transfer it at a price which in a way incorporates the fact that there is a cost saving of the packaging cost and cost saving for the transportation cost. Assume that this saving comes down to 3. So to the internal department, the transfer will happen at a value of 27, which takes care of two things. It helps the milk department to ensure that all its output is being billed and the revenue is being captured correctly. And think from an organization level, the milk division is recording a revenue of 27, the ice cream division is recording a cost of 27. So on an organization level, there is no change. It is only to make sure that the performance of different departments is comparable, that you are even coming up with an idea of transfer price. In the next discussion, we are going to look at the different methods of determining the transfer price between departments.